Canada just poured $25 billion into a single project. And get this, it's a pipeline. But this isn't just another infrastructure project. Nope. This one could either save the Canadian economy or put it at serious risk. It's called the Trans Mountain Pipeline Expansion, and it's 733 miles of engineering marvel, or some might call it a mess, depending on who you ask. Now, here's the kicker. The project started at $4 billion. So how did it balloon to $25 billion? And why is this pipeline so critical to Canada's future? Buckle up, because we're about to dive into a story that involves big oil, environmental debates, and global ambitions. Let's find out if this $25 billion gamble will make or break Canada's economy. First, let's set the stage. The Trans Mountain Pipeline. It's not new. This pipeline has been around since 1953, quietly transporting oil from Alberta's massive oil sands to the west coast. Back then, no one really paid much attention. After all, it was just a handy way to get oil to the US. And let's face it, the US loves its oil. About 60% of US oil imports come from Canada alone. That's how reliant the two countries are on each other, like coffee and Monday mornings. But here's the problem. Canada's biggest market is just one country, the US. And the world's oil demand is shifting, with most of the future growth coming from Asia. So Canada wanted to expand its horizons and reach those booming markets in China, Japan, and India. Sounds simple, right? Just build a bigger pipeline. Well, not exactly. The original plan to expand the Trans Mountain Pipeline started back in 2013. The idea was to triple its capacity and give Canada a way to ship more oil to the world market, and at the time it seemed like a good idea. But then came the protests, lawsuits, and environmental opposition. What started as a $4 billion project was suddenly in deep water, facing endless delays and ballooning costs. By 2018, Kinder Morgan, the original developer, had enough. They bailed. And in a move that surprised everyone, the Canadian government stepped in to buy the project for $4.5 billion. You heard that right. The government actually bought a pipeline. At that point, it wasn't just about oil. It became a national mission. So what's in it for Canada? This expansion opens up the door to new buyers. Finally, Canadian oil could sail to new shores, like Japan and China, where demand is high. The expansion itself promises to bring in an extra $2.7 billion in revenue every year. And over time, it's projected to add $34.5 billion in tax revenue. Sounds great, right? But wait, there's a catch. Here's where it gets interesting. The pipeline was supposed to help Canada fetch better prices for its oil by giving them access to new markets. The idea was simple. Fewer barrels going to the US, more going overseas, better prices. But that's not what happened. Instead, the costs skyrocketed. By the time the pipeline was up and running, the government had spent $25 billion, 6 times the original estimate. And that means Canada isn't getting the profit margins it hoped for. Sure, the oil's flowing, but the costs of transportation? Way higher than planned. This isn't your typical set it and forget it kind of infrastructure project. And then there's the bigger issue, Canada's commitment to fighting climate change. The country has ambitious goals to cut emissions by 40–45% by 2030 and hit net zero by 2050. But here's the irony. The oil and gas sector is Canada's largest emitter of greenhouse gases. So how exactly does a massive oil pipeline fit into those climate plans? Environmental groups aren't the only ones raising eyebrows. Economists are skeptical too. With the global shift towards renewable energy, some experts argue that the world is slowly moving away from oil. They say this $25 billion pipeline could become a stranded asset in just a few decades. Imagine spending all that money on something that might not even be needed in the near future. But wait, before you write off the pipeline completely, there's another side to this story. Despite all the doom and gloom predictions, oil demand isn't going to disappear overnight. In fact, global demand is still expected to rise by the end of the decade. Developing countries are hungry for energy, And that's where Canada sees an opportunity. Alberta's oil sands hold an estimated 170 billion barrels of crude, and even if global demand slows down, there are still markets that will rely on oil for decades to come. Take coal, for example. People have been saying for years that coal is on its way out. Yet the world is using more coal than ever before. Oil could follow the same path. Just when you think it's fading, it sticks around. For Canada, the Trans Mountain Pipeline expansion is about more than just oil. It's a strategic play. By opening up new export routes, Canada gains more influence in the global energy market. Suddenly, they're not just the US's go-to oil supplier. They've got a stake in the global game. But what about the risks? Well, for starters, American refiners aren't happy. They've enjoyed years of cheap Canadian crude, and now that some of that oil is heading overseas, they're starting to feel the pinch. Some analysts predict that higher oil prices could trickle down to consumers at the pump. And let's face it, no one likes paying more for gas. Back home, the pipeline expansion has sparked political debates too. Prime Minister Justin Trudeau has faced heavy criticism for supporting the pipeline while simultaneously pushing Canada's climate change agenda. It's a tough balancing act, boosting the economy through oil while trying to cut emissions. The expansion puts Trudeau in a tricky spot, and with his approval rating slipping, the pipeline has become a lightning rod for both supporters and critics. So, what's the bottom line? Canada's $25 billion Trans Mountain Pipeline expansion is a high-stakes gamble. On one hand, it could give the country a foothold in the growing Asian market and bring in billions in revenue. On the other hand, it's a massive investment in an industry that might be in decline as the world shifts towards cleaner energy. Is the expansion worth the cost? Only time will tell. What's clear is that Canada has doubled down on oil, betting big that there will still be enough demand to justify the price tag. Whether that bet pays off, well, the world will be watching. If you found this deep dive into the Trans Mountain Pipeline eye-opening, don't forget to hit the like button, share this video, and subscribe to StatStream for more insightful breakdowns on the global economy and the forces shaping our world. And before you go, check out our video on the US Economy Explained, key facts that affect you, to get a clearer picture of the bigger economic puzzle. Thanks for watching, and we'll see you next time.